Traders Corner is brought to you by IG.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, we've had a sort of trading hiatus the last couple of weeks. Last week was an educational show. So this week is jam-packed with charts, and let's start off with DRD Gold, in which you took a position, which you've now exited.
Yes, that's it. We're looking at a whole lot of a bunch of trades that we did before last week's public holiday, and we're going to recap all of these and see where we've taken profits and where we've taken losses. So yes, DRD Gold was a trade that we did about 3 weeks ago, and it worked out quite nicely for us. The chart of DRD Gold is up on the screen at the moment. And what I was looking for at that stage was the fact that the stock had broken out at it, then consolidated into this nice little falling wedge pattern. And those who watched last week's educational show will know that is a continuation pattern, which usually breaks out in the direction of the trend. And that's exactly what it did. You can see it broke out. So we went long of 3,600 CFDs at a price of R10.28. We were looking for a move up towards 12.50 with a stop loss at R9.50. Now, it didn't quite get to the 12.50, but there was a day, in fact, I think it was the day after the show 2 weeks ago when we put this trade on, and it had a very strong day. And into the close, I thought, you know what, let's not be greedy here for the extra couple of cents. Let's take the profit. So I sold out at R12.33, and that allowed us to bank a profit of 7,164 Rand. So, you know, keeping with the theme of hitting singles as we have been with the portfolio for most of this year, it's nice to just keep these little profitable trades ticking over. And that is exactly what we've done here.
And it's not that far off your target. And potentially it could be a trade that you re-enter at some point.
It's possible. You know, this chart structure still actually looks quite good to me. You can see it's been consolidating along sideways for the last week or two now. But definitely these long tails to the downside suggest that there is buying activity at the lower levels here. So I suspect there's a possible another move to the upside coming here for DRD.
Okay, so that worked out nicely. Nice little profits for the portfolio. But Truworths, of which you went short, hasn't gone and done what you wanted it to.
No, it hasn't. So 2 weeks ago, we did two short trades, Truworths and then Remgro, which we'll come to after this. And the Truworths one, unfortunately, hasn't worked out. The chart of it is there on the screen at the moment. And what I was looking for at that stage was the fact that the stock had trended down since April. And you can see it was pushing up against that downtrend resistance over there in late July. At that stage, we had candlestick patterns that were forming long tails to the upside. And that is always an indication that there's selling pressure at the upper levels. There was also a rising wedge pattern over there, which is also a bearish continuation pattern typically. And I was expecting that to break to the downside to continue the move lower. In the end, we shorted 1,180 CFDs at 89 Rand 80. And the stop loss there was 92 Rand 20. And I was looking for a move down into the mid-80s down here. That unfortunately didn't happen. As you can see, the stock has continued to move higher, and it's broken through that downtrend now. It's now sort of flirting with it underneath of the 200-day moving average over here. Nevertheless, we were stopped out of that trade at 92 Rand 70. So we incurred a loss there of 3,894 Rand after all costs are taken into consideration. So not the end of the world, but obviously not the result I was looking for.
I mean, it's above your stop loss. So did you actually see it and think, no, I've got to exit this trade?
Yes. Well, remember, I don't generally use auto stop losses purely because I'm in front of a screen most of the time. So it didn't. There was a tiny little bit of slippage there. You can see it stopped us out at 50 cents above our initial stop loss level. So that's I suppose, the price you pay for using a manual stop loss sometimes. It's gone beyond that level anyway, so I'm quite happy that we're out of it now.
You were also short Remgro, and that did actually work out for you, but using a different sort of technical setup there. Yes,
Remgro's been tracking sideways for most of this year, and when you've got a stock that trades sideways, what often works quite nicely is to use Bollinger Bands. So you can see the 3 Bollinger Bands indicated on this chart over here. That middle band is a 20-day moving average, and then the outer 2 bands are basically 2 standard deviations away from that middle band. And you can see how well that those Bollinger Bands have contained the trading action in this stock this year, or certainly over the last couple of months anyway. And what I'd identified on the show 2 weeks ago was that the share price was reversing down from that upper Bollinger Band over there. And it was also beginning to break below this upward trend that had been in place for most of July. So I took that as a view that we could probably try and scalp a quick short position here for a move back down into the middle of the Bollinger Bands. And I was looking for a move down towards about 250 Rand here. We went short 600 CFDs at 263 Rand. And it did fall. It worked out quite nicely, but it was a case where you needed to be very quick to take a profit here. And we had two quite sharp down days over there, and that particular, you can see it where the arrow is pointing there. I sort of thought to myself, I think we're close enough to the target here to take our profit. Let's not be greedy again for the extra couple of cents. So I banked the profit at 251 Rand and 57 cents, and that allowed us to then bank a profit of 6,372 Rand. So a good story in the end here. And thank goodness we did take that profit, because you can see the price has subsequently moved up again.
Well, exactly. I mean, it would have been a bit of a disaster if you had stayed in the trade, because ultimately you would have been stopped out.
Yeah, that's right. It would have been a frustrating one if we had have seen that profit being eroded. And that's a very frustrating thing. To see a winning trade turn into a loser is very frustrating. And again, in line with hitting singles this year, this is very much a case of hitting the singles. There's small profits, but they all add up ultimately.
Garth, so those are the three trades that you initiated for the portfolio. Now we're going to take a look at the bigger picture, because it kind of tees up what we're going to be, well, the trade that you've taken this week. Starting off with the S&P 500, which has had this incredible rally, but, you know, minuscule as well. And we talked about that a couple of weeks ago. The range has been really, really narrow.
That's right. So here's the chart of the S&P 500. And again, I've overlaid Bollinger Bands onto this chart. And the reason I've overlaid the Bollinger Band here is to show you this narrowing of the Bollinger Bands. Have a look over there on the top right of that chart. What's happened over the last 6 weeks, really, is that the S&P 500 has been trading in a very, very tight ranges each day. It's grinding its way slowly higher, and definitely the pain trade here is to be short, because it just grinds its way slowly higher day after day after day, and it's getting ever closer to this 2,200 level that we've been watching for a while as a potential target for the S&P 500. But what I want to bring your attention to specifically is the narrowing of these Bollinger Bands here, because that is somewhat rare for that to happen, and specifically for them to narrow so much like they have here. And usually when you get that contraction of the Bollinger Bands, it usually preempts a sudden expanding of the bands, which then also implies a sudden expanding of volatility. So we've had weeks and weeks on end now where we've had practically no volatility at all in the S&P 500. But this narrowing of the bands could be warning of a sudden breakout in volatility. And all it's saying is there's a big move coming. It might be up or it might be down. Often when the bands have narrowed this to this extent, the next move has been down, but not to necessarily say it will be down. We could find that this market suddenly melts to the upside. We'll need to give it a chance to see what it's going to do.
Yeah, but melts maybe is the operative word there, because I don't know if it's going to be a dramatic move. What about the other international markets, if you look at some of the other indexes?
So I want to look at the two main European indices that we look at. So this is the FTSE 100. This is obviously the London Stock Exchange, the top 100 stocks on the London market. You can just see that this market is very, very overbought now. That is an RSI at the top, Relative Strength Index. And when it's above 70, like it is here now, that is an extreme overbought reading for this market. It's gone up significantly due to the fact that the pound has been weak, and the FTSE 100 is very linked to pound-sensitive stocks. So when the pound weakens, a lot of these global companies that are listed there go up in value quite significantly. And that's why you've seen after Brexit, late June there, that was when Brexit happened, you've seen the FTSE 100 moving significantly higher, and it's gained about 15% off the Brexit lows. And that's purely to do with the weakening pound. But it is very overbought at this stage, so you've got to sort of start to think to yourself, is it not approaching time for a bit of a pullback or a correction here?
And continental Europe, if we look at the DAX?
So the DAX is the German market, the DAX 30. It's the 30 largest companies listed in Germany. And also here, you've had a very strong move to the upside over the last month and a half, really. And also, again, very, very overbought on your RSI up at the top here. And certainly over the last few days, there's been, particularly yesterday, there was a long tail to the upside on that candle. We kind of call that a shooting star candle, and it very often does indicate a potential short-term top. So my suspicion here is that this market also is getting a little bit long in the tooth at these levels, and it could also be facing a bit of a correction and a bit of a pullback in the near term. So the reason for bringing that up and then sort of teeing it up for the top 40 is to say to ourselves, okay, our market has actually decoupled very significantly
exactly.
from the other
I mean,
markets.
we're not overbought at all.
No, we're actually quite the opposite. I mean, if you look at our stochastic oscillator on the top 40 here, you can see it's at oversold levels, and the stochastic is just beginning to turn up. And we've got this lateral area of support at 45,000, which has been a very important support since March, really, of this year. And the market's tested that level a number of times during the year. It's held that level for now, and it has reversed up of that 45,000 level. So I think for now we've got to accept that the support has held. What does concern me a little bit, though, is the fact that we've got those falling highs evident. And you can see from May into June and July now, each time the market's rallied, it's made a lower high. And often when you see a pattern like that happening, it's warning you that this lateral support here, this 45,000 lateral support where the dotted line is there, that becomes vulnerable. And I think at some stage down the line, that market is likely to be vulnerable to breaking below that 45,000. And what kind of gets me thinking about this is the fact that we've got those overseas markets that are so overbought and looking like they could come down at any time. If that happens, then I would think that could be a catalyst that then sees our market breaking below 45,000. However,
well, exactly, because that wouldn't be a bad thing for the portfolio because you're hedged against the market.
I am, exactly, and we position for that. But this is now the top 40. Again, that same chart, I've just compressed it a little bit purely because I want to show you our option structure that is open on the market. We've had this on for a while, and this option structure, it's a put spread structure. It runs out until September of this year, so we've got about another month, maybe 5 weeks to go with this. And if the market were to break down below 45,000, that would be great because that sees our option structure moving nicely into the money. That would be perfect. But given the fact that we have reversed up off the 45,000 level for now, I have decided to go long of the top 40 cash CFD.
Okay.
Because why not? It's like having a free hit. We've got the protection down below, so we can go long of this top 40 future here, knowing that we covered if the market goes lower. But also, if it bounces, then I'll at least make a bit of money out of this top 40 CFD, right? And if it comes down, well, then I'll have to quickly exit that CFD and let the option structure do its work. So I've gone long of 2 contracts of the SA40 CFD, and that's at IG Markets, the 2 Rand per point CFD. So doing 2 of them means I'm long 4 Rand per point, and I've gone in at 45,167. And I'll let that move up and see what happens, maybe take profits on it if we bounce a bit more from these levels.
Basically, you have to be pretty nimble, though.
Very nimble, absolutely, because while the market's above that 45,000 area, I'm happy to have these long CFDs on. If the market starts to break underneath 45,000, then I definitely want to be out of those CFDs so that I can allow our option structure to do its work. And this option structure is a really nice structure. If the market does pull back, we stand to make quite good money. So yes, I suppose secretly I'm hoping the market does come off a bit in the weeks ahead because we're well positioned for that with this option structure.
Well, it would be, we were saying before we went on air, it would be nice to have this workhouse because, heaven forfend, you don't put an option structure on for the portfolio and there is a correction and everyone says, well, why didn't you?
Exactly. I mean, we've done these for quarter after quarter after quarter. And I think at some stage, we always put it on as cheap protection, if you like, which is what they are. But it would be nice to see one of them working out once because the point is the risk to reward ratio of these option structures, the way I do them here, is very good. So if we do see the market coming off in the weeks ahead, we'd be well positioned for that.
Yeah, and I suppose, and then you can trade around it as you have done today.
Exactly.
Okay, so gone long of 2 contracts for the IG smaller contracts. Garth, what does the portfolio look like then at the moment?
So after all of this, it hasn't really changed very much from 2 weeks ago. We're still sitting at about 290,000 Rand. We're still up 16% for the year to date. So it's a decent enough performance, I think, given the way the market's been this year. Those are the most relevant trades of recent times. So you can see our option structure up at the top here. Then the 2 SA40 contracts that I've done this week is there. And then the trades we closed out this week, DRD Gold, Truworths, and Remgro, you can see the results of each of those on the right-hand side there.
Yeah. Okay, so as you say, busy performance, not too much change. And then just to end off with, just a reminder that you can get daily highlights, or weekly highlights rather, as to what's coming up on the show.
That's right. We've created a free email list, so anybody that would like to subscribe to this free email list to see what's coming up on the show and what we're going to be discussing each week, you can go to traderscorner.co.za and you'll see in the middle of the page there is a link for a free weekly email. All you need to do is enter your email address, and there's a double opt-in function. So we won't be spamming you. You'll just get an email once a week telling you what's going to be on the show each week.
Okay, great. Garth, we'll leave it there. Thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.
Traders Corner is brought to you by IG.